Resource Watch is brought to you in association with Thebe Investment Corporation.
Good evening. This is our final show for the season, and we're taking a wide-angle look at South Africa's mining sector. I'm Mncwango, and this is Resource Watch. There's much concern in the mining sector and the economy as a whole about the effect of a potential 25% electricity tariff hike. Now, the National Energy Regulator of South Africa, that's NERSA, has just concluded 2 days of public hearings into Eskom's request for a price hike. Reporter Mhundwa spoke to the mining players.
As South Africa's energy regulator deliberates on whether it will grant Eskom a tariff increase, mining industry players say they prefer cheap rather than reliable electricity.
If the costs or the tariffs become too high, we close down. If it's not that reliable, it's a nuisance. So from that point of view, most of industry prefer lower cost electricity rather than 100% always available electricity.
The Ferroalloys Association has also said that some member companies are considering moving their operations abroad as the incentive of cheap power in South Africa is no longer there. It's a similar scenario with mining companies.
We're going to need to consider even further mine closures or mine size reduction, putting them on care on maintenance, etc., which is not an optimal solution for us.
But Eskom maintains that it needs the money to, above all, buy diesel, which it says helps to avert load shedding. The utility says there isn't an alternative available at short notice.
Where we use the diesel can be converted into gas turbines, but that will take 18 months, and that will require them to be out of commission for 18 months. The other alternatives are, for example, bringing in the barges. The cost of this is prohibitive. But also it takes up to 24 months to mobilize these barges to South African shores.
The regulator will decide whether or not to grant Eskom the 12.6% increase at the end of June. Mhundwa, CNBC Africa, Johannesburg.
It's a tough environment for miners in South Africa and globally. There are falling commodity prices, rising costs, as well as policy uncertainties. And all of these are coming together and taking their toll on the industry. Now, for some analysis on the general outlook, we're joined by Sizwe Mncwango. He's the Chief Executive of Thebe Energy and Resources. Sizwe, it's always lovely having you in the White Couch. Maybe let's start off with the global picture and then work our way inwards. What are the global factors at play that are a large variable or large influence on the local outlay that we're experiencing?
It is a very, very tough environment indeed, and but a lot has changed. There's been a lot of improvement. I mean, I looked at the indices yesterday. There's a lot of greens going up. I think Greece has just committed itself to reform its economy. EU is quite happy with what is being presented by the Greeks around some austerity measures that are coming to the fore to assist the economy of Greece to take its shape. And when the European economy sneezes, we all catch the flu. I mean, and
of course, there's Europe that's getting better. We know that the US is also showing positive economic resurgence, but China still seems to be a bit of a problem with some fundamental economic weakness coming through there. Are we overplaying this, or should we be paying more attention to the Chinese story?
I would say China is correcting itself. I think there's a market correction in China. The high growth of the last maybe 5 to 10 years, I think they need to stabilize now and smooth back to reality. But the numbers are still more robust than the whole Africa economic kind of growth, because they're still talking 5 to 7%.
And it's still a relatively very big market. But let's take all of this and let's put it together with the commodity price cycles. We've been seeing commodity prices really at the bottom of that cycle. So are you saying that we've seen the worst of the bottom of that cycle, and we're most likely now to see a takeoff in terms of those prices?
I don't think it can get worse than this. I don't think it can get worse than this. I think We've been in a very tough gold, in a very tough platinum, just talking about the resources that we depend on in South Africa. Very, very tough coal situation. I don't see things going worse than that. And a lot of proven reserves that are very difficult to mine. We are not able to access them. But we're going to pick up very soon. I'm quite positive about that.
And just before we get to the South African situation, let's really talk about how big mining companies have responded to these global dynamics. We seem to see a very strong trend towards getting leaner and focusing on core production and sort of getting out of commodities where one does not have the best expertise in. Again, is this a trend that you're seeing likely to be maintained, or with an upward swing, is this suddenly going to begin to reverse itself?
I think we were very complacent for quite a long time. We felt entitled to high prices. We felt entitled to profit windfalls. I think we've got to work harder a bit now for this. So it's going to call for a lot of challenges in the business sector. It's going to call for strong, decisive leadership. It's going to call for a lot of cost cutting. And that's what we're finding this day and age. And that should be the trend going forward. Back to the basic business principles that helped us to get to economies that are solid and robust.
And of course, in the South African situation, we know that the mining sector has been the backbone of the economic development that we've seen in the country. It's not what it used to be back in its heyday. How would you describe the opportunities for mining investments today?
The opportunities for mining, not going to see a lot of growth in mining. If you look at how we were dependent on mining over the last 20 years and how new technology type of companies like MTN and Vodacom are now creating such a large pool in the GDP, mining will remain a solid foundation for us. But I see it diminishing in terms of its contribution. It will still sit at about 25%. As we see it today, but over time it's going to diminish.
So you've got a smaller piece of the pie in terms of contribution to GDP. Let's put Thebe in as one of the industry players. How then do you navigate the company going forward, and where are the focus areas in a dwindling industry?
Well, we've spoken a lot about our participation in the energy sector. We are fully in support of the reforms that the minister is bringing in terms of the regulatory framework that creates certainty for such huge investments. So Thebe is going to be right at the forefront of energy participation. We've done well over the last 5 years with the new programs. What the minister is currently introducing around core generation, around baseload IPPs. We are at the forefront. We've got good partnership, even in oil and gas. I mean, we've been in an oil and gas partnership now for the last 13, 14 years. So we see a lot of growth going forward and stimulating the economy through energy.
So energy is going to become a very key focus for Thebe Energy and Resources, almost to say that it will be outweighing any other non-energy activities. Am I reading that correctly?
Well, it will outweigh, but we must really understand, though, that it can't exist in isolation. As you grow into the energy space, there's a lot of support industries around energy. We're talking services industry. If you really strike it right in the Karoo, you're going to need hotels in the Karoo, you're going to need water in the Karoo, you're going to need infrastructure, logistics, and everything else. So energy will continue to drive and propel the economy, but there's got to be a lot of supporting industry that come up with it so that we've got a holistic economy and we are able to take things forward.
So to latch onto your point that even the energy business can't exist in a vacuum, the entire company obviously also exists in a particular environment. Let's talk about the regulatory environment, the legislation that underpins the relationships and the kind of business that we're seeing there. How would you describe, as an industry player, South Africa's regulatory landscape? Is it conducive for investment and for the development of this holistic picture that you speak of?
We are fortunate that we do have the regulatory environment. It is not mature yet, it is developing, but we do have a base regulatory environment. At least the investor can be able to determine what is likely to come out. It is not perfect, which is why we need private sector participation, we need dialogue, we need debate, so that it can become more and more robust. But you're not investing in a vacuum, Nosipo. You are investing in an environment where there's policymakers, they've thought about the issues, they are also human just like you and me, so they need more input. to create even more certainty.
But let's contrast that to what we're seeing on the African continent, because many voices are saying growth is in Africa and not necessarily in South Africa. Is the policy environment in place? Is the stability in place? Are there returns to be made?
Sure. So there is a high risk investment regime compared to South Africa in the rest of Africa. And as a business person, I prize that risk. So every day I make a choice whether to invest in South Africa, very stable, very low return, or I invest in the rest of Africa, high volatility, high returns, high risk. And as a business manager, I continue to have to balance my portfolio that way. Where do I make investment choices? What underpins those choices for me? Lots of growth in Africa. I mean, South Africa, you're talking less than 2%. You're talking 4-5% in the rest of Africa. And you can price the risk. And you can make huge returns for your shareholder. But you've got to understand how those economies function. And you've got to humble yourself when you go into Africa. And be part and integrate into those communities so that you can understand how they really work in those areas.
A quick one just on the union power that we have in South Africa. We're in the middle of a gold sector wage negotiation. You're speaking about pricing in risk. Has the price of the prowess of labor increased in South Africa simply because they have proven that they can hold an entire sector to ransom? We saw that in the platinum sector. We're hearing rumors that they're willing to go for 10 months in the gold sector if they have to come to a strike. Has labor increased the price of risk in South Africa?
I wouldn't like to criticize it that much. I think labor is based on a principle of unionization. I find labor not so unionized. I find it quite fragmented. I find it quite disparate. And if you really want to deal with the issues as a union and work with the employer as a union, labor is not strong because of the fragmentation that exists, especially in the mining industry. You know, you've got NUM and you've got AMCU. You know, before they can even deal with the issues of the Chamber of Mines, they are fighting amongst themselves. They are stealing membership from one part to the other. And the focus is really inward, as opposed to really representing the aspirations of the worker. They are really trying to represent the aspirations of the individual unions. And it does weaken labor from that point of view.
A very big thank you to you, Sizwe. And of course, a very important point that we end this conversation on, the core of unions, of course, is unity. Until that has been found, the voice will always be fragmented, and the power of unions, therefore, will also be fragmented. And this, of course, is in the South African mining sector. Very big thank you to Sizwe Mncwango. He is the Chief Executive of Thebe Energy and Resources. Thank you for watching and staying in touch over the past year. We've come to the end of this series of Resource Watch. You can find the episodes of all our shows on the website. That's www.cnbcafrica.com. And don't forget that you can keep the conversation live with me on Twitter. That's by following me @TheRealNozi. Until next time, it's goodbye.